Good morning, students. Let's start our chapter 9.4 Goods and Services Tax GST. One of the most important topic as well as one of the famous topic you ever find GST. Everybody knows because it's recently take place in Indian economy. GST, you have to learn the basic concept as well as the key features of GST from your examination point of view. What is GST? Whenever we talk about GST, only one thing float in everybody's mind, that the one tax, one nation, one market is GST only. We know very well for the last several years in India, several differences were being noticed in the tax levied on the goods and services. The rates of the tax on similar goods and services being collected, different states were different. Not only this, by the time the goods and the services reached at the last, means the final consumer, so many taxes has been added on that, which just make those goods so expensive. As a result, that ultimately the public has to bear the burden of those taxes, and so many tax has been levied on that, and just because of that, some direct and indirect taxes that are to be borne by the public only. On these bases, it just becomes the need of the system that these taxation systems should be simple and uniform in every state of the country. And just because of that, the GST come into existence, that is a one tax, one nation and one market. This slogan has been given to the GST. From which date, by which date GST come into existence or come into force? Please underline one mark question. The GST system in India come into force with effect from 1st July 2017. In the toolkit, the meaning of GST is also given over here. It refers to such a system of indirect system tax under which, besides ease and uniformity at a national level, it is taken into consideration that the final consumer should not be required to pay the taxes on the tax. So GST is a tax system which has included itself almost the taxes on all the products as well as services to be levied by the central as well as state government. Let's see what are the main terms are to be used in GST. That is your supply. Supply, first of all, it is a very comprehensive term. It means besides the sale, it includes several items, that is like transfer prior to bring into force or the GST system. The tax is levied on that in two stages. One is excise duty at the time of production, and now it is levied only at the time of supply only. That's why the point of supply is also known as point of tax. Please underline the point of supply as per the GST term is known as the supply point of tax. Inward supply, it refers to the material and the service which a supplier gets from the manufacturer or a product and providing services. That is your inward supply. And outward supply, it refers to which supplier supplies to the buyer, that is our outward supply. Please make a difference between the inward and outward supply. The inward supply, it refers to a service or a material a supplier gets from manufacturer, and whatever the supplier supplies to the buyer, then it is known as the outward supply. Input tax, it refers to the tax which is to be paid on by an individual or a business unit on the input tax that is paid by an individual and a business unit at the inward supply, while the output tax is refers to paid by an individual or a business unit on the outward supply. So input tax credit, ITC, it refers to the amount by which supplier lessen or decrease the output tax. Undoubtedly, this amount is that the supplier has already paid. In the upcoming lecture, I'll just discuss one of the example that this concept will be clear to you, that what is the input tax credit, whatever the tax is payable, how it is to be calculated, the output tax minus input tax credit. Whatever the input tax credit will be there, after deducting that from the output tax, you will get only the net tax payable. How it is to be done, we will just later on do it in an example. Intrastate supply. Intrastate means the supply is just done in the same state or the union territory is known as the intrastate supply. And interstate supply, it is supplied from one state to another or another state or union territory. Central GST means CGST. The share of the central government in the GST is known as the CGST, and whatever the share of the state government when the GST collected is known as the SGST. So there are two terms that should be very much clarified by you, that is CGST and SGST. Union territories has the GST, that is UTGST. Integrated GST means IGST, that is levied on the supply, is known as the amount of 50% of the share of the state where the goods are ultimately consumed, and remaining amount is paid to the central government. Value addition. Before learning this point, I just want to set an example for all of you. Suppose, let's see a bakery person, what he did, he just produced the or manufactured the biscuits. But have you ever think, the first of all, food grain means the wheat is cultivated by the farmer. Farmer produce the or cultivate the wheat, then it is taken by the flour mill owner and converted into flour, then it converted into biscuits by the bakers. It means every time, every person, whether it is the farmer, whether it is the flour mill owner, whether it is the baker, everybody just add some value in their product. Wheat has been produced by the farmer only. Suppose wheat is produced of 1,000 rupees. Then flour mill owner has converted into flour and it is of 1,200. It means he add the value of 200 in that only, not 1,200. Because 1,000 has been produced by the farmer earlier. So what is the value added by the flour mill owner? That is only 200. If we talk about the baker, suppose the biscuits are of rupees 1,500. How much value is added by the baker? That is 300 only, not the 1,500. Because 1,000 is done by farmer, 200 added more by the flour mill owner, and 300 added more by the baker. Earlier, what was happened before GST, the tax has been levied on every amount, that is whether 1,000, then 1,200, then 1,500. Moreover, what happened just because of that? It just have a burden, indirect burden on the consumer itself, nothing else. So in order to remove this burden, the value addition has been settled down in GST. So it is one of the important terms, that the value addition of GST, it refers to the tax is levied only on the value added, not on the tax on tax. In other words, the would-be buyer will pay the tax on the total of the actual price of the goods plus the profit realized. The input tax will not be added to the actual price, and profit will be calculating the tax. See how? With an example, it will be more clear to us. Mr. A buys goods 1,000 rupees, on which he pays 180 rupees as GST. Means 18% GST has been levied on 1,000 rupees goods. Now he supplies the goods to these two Mr. B on 20% profit, and he gets 18% GST on that supply. The GST is to be paid by B is to be calculated as follows. See, Mr. A's cost is 1,000, GST paid by him 180. GST paid by him 180. Now, profit earned by Mr. A. Now, Mr. A sold it for 1,200 and profit earned by him is 200. So 20% of 200, 20% of 1,000 will be 200, the profit earned by him. Now the supply price will become 1,000 plus 200, that is your 1,200. Now GST is realized from B. B has purchased the goods of 1,200. 18% of 1,200 will be 216. So the total amount received from Mr. B will be 1,200 plus 216, that is 1,416. Now you see that we have charged the GST again and again. No, my dear, there is a formula just written after this, net tax payable. Please see this formula and mark it. The formula is net tax payable. Here the net tax payable is given to us. What is to be done in that case? That whatever that Mr. A has taken from the government, the output tax minus input tax credit, by this way the net tax payable is to be calculated. Like 36 is to be payable only. How? See, on 1200, first of all it is 1000, then 180 rupees GST has been imposed there, and then 200 rupees profit is to be imposed there. The total it become 13,080. And if we talk about the next GST, that is 216 rupees. That is 216 rupees. Earlier the GST credited was 180. This is paid by the A. Earlier how much it was? It is 180. Now it is paid by B or due to B 216. Out of this 216, the input tax credited, already it is charged from A, that is 180. So net tax is payable. How much it is to be payable? It is payable only 36 rupees, that is on the value added, not on the complete amount. So Mr. A have to deposit only 36 rupees as a GST on the value added of 200 rupees, because he has already paid 180 rupees on the cost of 1000. When he purchased the goods of rupees 1000, he paid tax on that. Why he should pay it again? No, he will not pay it again. He will just pay on the amount of the difference or the value added by him. So this is all about the concept of the value addition in case of GST. Let's move to the next question. Yes. The next is the cascading effect. Cascading effects refers the tax on the tax to be realized from the last consumers of goods and services. In the tax system prior to the GST, tax on tax was realized from the consumer. But under the GST, the evil of the tax system has been done away with, and it has been cleared from the following table. Like the Mr. A purchased the goods of 1000, as per the old system, GST is to be amounting to rupees on 1000 rupees, that is your 130, and supply price will become 1130 rupees. Now VAT will be charged from B on 1130, that will be 56.50, and the total invoice price will be 1186. But if we talk about the GST system, the 1000 cost has been paid by the A, the cost of the goods. No GST imposed on that. It is only the 1000. No excise duty, in fact, is to be charged over there. Only the GST is to be charged, that is 18%, and that will be 180 rupees. This is the cascading effect, we can say. Whatever the less amount is to be paid by him on the total price is known as the cascading effect. So you have to learn this, and sometime you may get the practical question related to this, might be in the paper. So please do it well. Now the key features of the GST. It is one of the important topics related to the GST we ever have. Please have a look at the points. Key features of GST. Number one, taxable event under GST. Prior coming into force the GST, the tax on goods and services sale purchase are mainly levied on two stages. First, at the time of the production is known as excise duty, and secondly, at the time of sale known as sale tax. But now the GST just make it combined, and one tax will be there only. There is now the taxable event will be considered only at the time of supply, not at the time of production and sale both. Nature of supply. The GST decided on the basis of the nature of supply. This is the evidence that the GST is of several types, namely CGST, SGST, UTGST, IGST. When a particular tax is be levied, depend on the nature of the supply. If the interstate supply will be there, then CGST or SGST or Union Territory GST is to be imposed. In interstate supply, only the GST is to be imposed. On import, BCD or IGST is to be imposed. And on export, zero rated GST is to be imposed, levied in India. On export of the goods, there is no GST. That's why it is known as zero rated. The principle of the destination should be clear to you while doing the GST. According to this principle, the accrual of the GST take place on the basis of the destination or the consumption of the goods. In other words, the payment of the GST will be done by to the taxing authority in very state or the union territory where the consumption of the goods is to be done finally. Only in that state the payment has been made. No doubt it is levied everywhere, but whatever the net tax payable, it is to be paid where it is to be consumed. So please keep this point. The principle of the consumption, the principle of the destination should be clear to you. Dual GST system. In India, dual GST system has been adopted. Under this system, the central and the state government will have equal share in GST paid at the time of supply of goods and services. Such situation arise only when the transaction of sale and purchase take place in intrastate level. The GST received on supply will be divided into CGST, SGST and UTGST. Besides the sale purchase transaction take place in the interstate level, the IGST will be paid on the tax authorities of place of consumption. The IGST received in the way will have 50% share of the government of place of destination, and remaining 50% will be shared by the central government. There are various rates has been imposed on that. The tax structure is 0%. In some of the goods, no GST is there. In some of the goods, is 0.25%. 5% will be there, 12%, 8% and 28%. The different categories are there, and here the details of the categories are mentioned over that. The no tax category, all the fortified milk, fruits, vegetables, on these napkins, etc., no tax has been imposed. If we talk about the 5% category, it includes a skim milk powder, fish fillet, frozen foods, coffee, coal, fertilizer, tea, spice, pizza, bread, kerosene, Ayurvedic medicines, etc. And the services of railway and airways is also be included at the category of 5%. If we talk about the 12% GST category, the frozen meat product, butter, cheese, ghee, pickle, jewelry box, wooden frames, paintings, and in business class we talk about air ticket and movie ticket also fall in this category of 12%. If we talk about the 18% GST category, the sugar, cornflakes, pasta, pastries, cake, detergents are some notable items in this category. And the services of the restaurant inside the hotel with the tariffs of rupees 7,500 and outdoor catering and movie tickets priced above the rupees 100 is also included in the category of 18% GST. And 28% GST category includes the 200 goods, over 200 goods, moreover, sunscreen, lotion, pan masala, dishwasher, weighing machine, paint, cement, vacuum cleaner, and the services of 5-star hotels and casinos are also included in the, means mostly the luxuries has been included in 28% category. Now, registration under the GST Act. Yes, every individual business unit supply goods and services both responsible for the registration. The normal category has to register turnover more than 20 lakh, and the special category that has the turnover more than the 10 lakh. Both has to get them registered. Input tax credit under GST. Input tax credit, if you remember, we have did earlier the ITC concept. It is absolutely same. You have to do it at your own. If you find any difficulty, please ask. The next one is the GST provision on exports. In case of exports, the place of the destination and place of consumption in some other country, hence no GST is levied on the supply. But the exporter can get the benefits of input tax credit from the concerned tax authority in the form of refund. So please, about exports, this is one of the major provision that is done for about GST. Please underline and keep it in your mind. And GST provision for the import, if we talk, imports is taken like the interstate supply, and this is a very reason for levying the IGST besides the custom duty. Nowadays, custom duty will not be imposed. Instead of that, on imports, the GST provision has been made, and existing taxes are to be summed under the GST. All these taxes has been counted under the GST only. Now there is no central excise duty, state VAT, central sale tax, purchase tax, luxury tax, entry tax, entertainment tax, service tax, fees and surcharges. Nothing is to be charged. Only there is one tax for the one nation, for the one market, that is our GST, goods and services tax. So all these taxes has been subsumed in the GST. So let's recall what we have done today. We have started with the introduction of GST first. We have done the meaning of the GST. After that, we did the main terms related to the GST, and then we just come to know that what are the key features of the GST. These are the taxable under the GST, nature of the supply, principle of the destination, and dual GST system is there. GST rates are there, under which category which product is to be fall, and input tax credit of the GST, GST provision about the exports, on imports, and existing tax to be subsumed under the GST. These are the important key features that you have learned. You might have the long question related to the key features in your exam, or whether you have a short note about any of the concept that is related to the GST. But as it is a new topic added in your syllabus, so it is very much important from examination point of view as well as your further studies. So please read this topic so intensively, thoroughly study it, thoroughly learn it, have the Google search as well, find out the practicals related to case studies related to the GST. Then it will be more clear to you that how GST works, how this is to be calculated. So do well, write and learn the notes of the chapter that we have done today and send PDF to me. It is all about for the day. That's all. If anybody have any query, please feel free to ask. Please raise your hand if you have any query. If anybody have any query, please, I request them to raise your hand to ask the query, please.